Now, every time NATO was expanding towards Russia, Russia kept on saying, please don't expand, please don't expand, please don't expand. But वो धीरे 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 करके आते गए. When NATO expands, what does it mean? There is a rule in NATO, North Atlantic Treaty Organization, that if one country or one member of NATO is attacked, then it is assumed as an attack on entire NATO. Today, America has not gone into Ukraine with their soldiers. But if Russia goes and attacks, let's say, Germany, then America will have to go and support it. With NATO, America can put their missiles right at the border of Russia. Fire karenge, and before Russia could react, missiles will reach Moscow or wherever it wanted to hit. So Russia is worried about America expanding to its west and putting missiles, and it wants to put a stop on it. And which is why it has taken the risk of going into this invasion despite sanctions. So thodi raisi mentality, thodi geopolitical risk of supporting or securing their border, thoda need for, alternatives to transfer oil, gas, and other commodities. Put all these things together, we have seen Russia invading Ukraine. And like they took a part of Crimea, I'm sure this time they are intending to extract guarantee from Ukraine that they will not join NATO. They will probably put their puppet government so that, they remain under their control, their confluence. And we will probably see higher oil prices for some time to come.
Sure. Thank you so much, Nilesh Bhai. I think these are deep insights, which normally, in fact, I was not aware about these deep insights. And I think it's definitely helpful to understand what's exactly going to happen. Now, is this, the crisis going to spread? Of course, like NATO may not join the war, but, with the crude prices going up, we may have deep impact on the inflation and, commodity prices going and all that stuff. So, globally, what do you think is, the impact of this is going to happen on, let's say, inflation, markets, interest rate, everything? What's going to happen?
So RBI put inflation target for FY23 at 4.5%. In all likelihood, it will be revised upwards. Now, it may revise in 0.5% from 4.5 to 5 and then to 5.5. But our belief is that the inflation number for FY23 could be between 5.5 to 6%, assuming oil remaining at $100 a barrel and petrol prices revising upwards post UP election. Now, 5.5 to 6 is high inflation, but it is still well within RBI's target range. And our inflation trajectory will depend upon how high oil prices go and how long it will stay at that level. Now, one silver lining in this dark cloud is US-Iran going back to negotiating table. Apart from OPEC and Russia, there are 3 countries which can swing oil at current level. Venezuela is world's largest oil reserve holder, but aisa country hai that they don't produce oil. Their economy has collapsed. The second one is Iran. They have huge amount of oil, but their oil technology is of the 60s and 70s vintage. They have not been upgraded. And because of the US sanctions, other than China and black market, they are not able to sell oil. Now, if US-Iran comes to some terms on the nuclear deal, Western world, maybe led by Europe, will invest into Iran oil industry and their output will increase and that will cool down the oil prices. The third is Libya. It's a very, very small producer compared to Venezuela or Iran in terms of potential. But again, it's a swing whereby it can give 1 million or 2 extra oil. So the silver lining in this dark cloud is US-Iran nuclear deal, which will increase oil supply and keep oil prices from going further higher. The second could be a very quick resolution of Russia-Ukraine, What if tomorrow Ukraine president announces that I will not join NATO? And he even gives way for, if not puppet government of Russia, a kind of coalition government where nationalists and Russians all are together. That kind of resolution is good for NATO, it's good for Russia, it's good for Ukraine, and then oil prices can suddenly come down. This is how oil prices will behave. In our view, right now, it is fair to assume that oil will be $100 plus for some time. We have to pray that it doesn't go to $140, $150 a barrel. The remedy for higher oil prices is higher oil prices. It's quite unique, but at higher level of oil, new capacities come on stream. Oil companies invest in research and development, in exploration, and most importantly, users try to go to other alternatives. This in turn breaks down long-term oil demand and oil prices come down. If you look at backwardation in oil price curve, it is going from $100 all the way down to $80. So effectively, higher oil prices will automatically put pressure on higher oil prices at some point of time. By increasing supply, reducing demand, oil prices will again soften. So we just have to hope and pray that this storm is for month, 2 months, 3 months, 6 months, not 1 year, 2 year, 3 year.
Thank you, Nilesh bhai. In fact, that is on the oil thing. But I was thinking that in case the oil for a certain period remain high, because already the inflation is on the higher side. And in US, it's like a 40-year high inflation. And in India also, it will rise. So in case for a 6 months or this war continue for the longer period and oil touch nearly 110, 120, and then it will, the inflation will also rise. So what impact will have on the Indian economy? Because then our deficit will also balloon.
Right.
So what do you see? Yeah.
So Akhil bhai, we import about 4 million barrels of oil a day. $10 ऊपर गया, $40 million someone has to pay. Whether it comes from our pocket, government's pocket, or corporate India's profit. But $40 million has to be paid today so that tomorrow 4 million barrel of oil comes. Otherwise, we'll become like Sri Lanka, where there is no fuel left. Now, $40 million for $10 price movement on a yearly basis is $15 billion. If we assume that oil prices will go to another $40 up, that's $60 billion. Obviously, it has a material impact. Now, what is the impact of higher oil prices? One, your current account deficit widens. That means you have to raise dollars from somewhere else. Second, your rupee comes under pressure because your current account deficit widens. Third, your inflation goes up as oil prices have gone up. And fourth, your fiscal deficit can go up because you won't be able to pass entire oil price rise to the consumer at higher and higher level. So you end up having higher inflation, higher fiscal deficit, higher current account deficit, weaker currency, and that puts pressure on your economy because you keep on paying $40 million a day for every $10 increase in oil prices. Our oil demand is also kind of bit inflexible. It's not, I mean, it does reduce at higher prices, but not by significant margin. Now put all these things together, oil is Rahu and Ketu of our Kundli. The only silver lining in the dark cloud is that earlier at $40 oil, $60 oil, hamari bank bachti thi. Now, thanks to IT exports, thanks to remittances, thanks to foreign direct investments and private equity investments, our ability to bear higher oil prices is probably around $80 to $100 a barrel. Last time when we had $100 of oil, it was 2014. At that point of time, reserves was about $300 billion. Today, it is $600 billion. The inflation number at that time was higher. Today, it is lower. Economic growth at that time was lower. Today, it is higher. So we are in a slightly better position to absorb higher oil prices. मार पड़ेगी, सो नहीं जाएंगे, फिर भी खेलते रहेंगे.
Nilesh bhai, I should really admire the fact that you have all the numbers in your, fingers. How much will be the impact of every $10 increase? Amazing. And let's hope Rahu and Ketu stays away from the Indian economy and we don't get impacted so much. That was really insightful. In fact, as we are talking, there are a lot of questions coming in, and people are curious to have them answered. So Anand Saxena has this question that, of course, on the Fed, that what will be the impact on the rate hike plan of the Fed. Of course, the Fed was planning to increase the interest rates, and I think there were 3 or 4 planned. So because of the increased crude prices, inflation, will the Fed increase the rates quickly? What's your view on that?
So Fed एक ऐसा फायर फाइटर है जो बम्बा लेके, फायर टैंकर लेके जगह पे तो पहुंच गया है, आग जोर से जल रही है और वो बोल रहा है पानी डालो पानी डालो पानी डालो, बट फायर टैंकर में से पानी नहीं निकल रहा है, पाइप लेके खड़ा है. US inflation is 7.5%. It is higher than India for last 6 months. Fed is kept on saying that we will raise interest rates, we will raise interest rates, we will raise interest rates. But आज की तारीख में they are buying government securities, they are pumping liquidity. It is almost like a fireman first dropping oil into the fire before he starts with the water. Now this has put the entire world in a very peculiar situation. They don't know what is the end game of Fed. Why are they tolerating higher inflation for last 6 months, despite excess liquidity in the system? They are today only doing verbal intervention. This has put Fed into a very, very difficult spot. On one side, their credibility is going down. Imagine if you have a fireman with fire tanker and fire is burning and he's not throwing water. In fact, he's throwing oil. You're not going to like that fireman. Second, Fed chairman has been given second term by current President Biden. This year in middle, there is a midterm election in US. You can't go to election with low growth and high inflation. So there will be tremendous pressure on Fed ki bhai inflation kam kar ya growth bada. Now you can only raise inflation by raising interest rates, which means growth will come down. So worst case, Biden will say, let the growth be higher, inflation ko maar goli abhi. So there is political pressure on US Fed to remain accommodative, which explains why today they are adding oil to the fire rather than throwing water. Now put all these things together, Fed is in a very, very difficult spot. Fed has 2 kinds of members, one who can vote for rate hike and one who can't. Those people who can't vote, they are making maximum noise saying that we should raise interest rates by 50 basis points. Mere ko to karna nahi hai, mera kya? It is like me saying that when you invest in ICICI Prudential Mutual Fund, please expect 50% return. Mere ko thodi deliver karna hai. Now, all this have really impacted Fed's credibility, and which is where Fed will have to really walk a tightrope. One side, they have to support growth because there is midterm election. On the other side, they have to maintain their credibility because their inflation for 6 months is running ahead of Indian inflation. Third, their real interest rate is negative to the extent of almost, 7 minus 0, about 7%. We believe Fed will be very, very, very cautious in raising rates. They will continue to guide market as to what they are going to do. They will not shake the market because for last 2 years, they have pumped liquidity to create growth. Now by raising rates and taking away liquidity, they can't allow growth to suffer. नहीं तो गुजराती में कहावत है, बावाना बेव बगड़िया, growth भी चला जाएगा और inflation घर में रह जाएगा. You can't afford to lose both the things. So we believe Fed will raise rates undoubtedly, but they will raise rates gradually and calibratedly. They will give enough warning to the market, and they will err on the side of growth. So if today market is expecting between 3 to 6 times rate hikes, it is more likely to be 3 to 4 rather than 5 to 6.
Thank you, Nilesh Bhai. In fact, this was really insightful. The next question is from Mr. Madhu Sudan. He asked that there is a pattern that always the market crash and next day it recover more than at least 50%. In the last dip of 1700, it fully recovered. And in fact, from the COVID, after COVID also, it has recovered very fast. So is there any pattern? There is something to be read between the lines that why this pattern is being followed?
Madhubai, there is no pattern. It is all investor behavior. In March 20, FPIs panicked. They started dumping at any prices. And we kept on buying. Now the recovery did happen, but it didn't happen overnight. The journey of Feb 12,300 Nifty to March 7,500 Nifty got completed only in October 2020 when Nifty touched 12,000 again. So it was a kind of, long recovery. On the other hand, in April, May 21, we have seen very quick recoveries. Even in second wave, markets did correct to 16,500, but then quickly recovered back. So I will say there is no pattern. Market has a mind of its own. It's a confluence of investors from across the world. And sometimes market recovers fast. Sometimes it takes times to recover, but it is essentially factoring in or discounting in future. If discounting is better, then the recovery is faster. If discounting is poorer, then recovery is longer. So I would say there is a fixed pattern. Market has a mind of its own.
Thank you, Nilesh bhai. Market has been correcting since October 18, and it's down almost 12%. Nifty is down from the peak, and mid cap, small cap, and everything else is far more down. Of course, it's impossible to predict what will happen in the short term. But what's your gut feel and what's your numbers saying? How bad things are going to get this time? How much downfall you think it can further go from here, or you think not much scope is there? It will be volatile or it will go up. What do you feel? How does the situation feels like?
So Mukesh bhai, one can never estimate what is the bottom of the market. In March 20 at 9,000, we gave at 10,000 Nifty, actually, we gave a call that this is time to be overweight equity. 9,000 we repeated, 8,500 we repeated, 8,000 we repeated, 7,500 we repeated. मतलब ऑलमोस्ट 10,000 से लेके 7,500 तक हम लोगों को यही बोलते रहे कि बस अभी बढ़ाओ, अभी बढ़ाओ, अभी बढ़ाओ. There was a 25% correction after we gave overweight call. Now, people who heard us on, let's say, 21st of March, by 27th of March, तो उसको गुस्सा आया होगा कि बस कहाँ पे फंसाती है. Fortunately, market recovered, and that's why we are here on this webinar. But did I ever had a view that markets will touch 18,500 in October 21? I can tell that wasn't the view. We expected markets to go to 12, 13,000 by end of 21. It touched 18,500. So everything is based on what is discounted by the market today versus what will be the event in the future. For example, market today is discounted and Omicron is behind us, and new variant will not come and hit our economy. Now, if there is Omicron or something like that, markets can correct. But if there's not, then markets will continue to rise. Market is discounted today that Russia, Ukraine will be a short-lived tenure. It will not result into bigger war. It will not result into inflated energy prices for a long period of time. Now, if that happens, markets will correct. If not, markets will rise. The third thing, market is assuming that FPIs are sellers. They have sold more than 1 lakh crore between October 21 till today, but they are sellers at a price. They are not selling anything at any price like March, April 20. Now, if they remain sellers at a price, market should be fine. They will absorb their supply. But if they become aggressive sellers like March, April 20, correction will be there, but the recovery will be faster as soon as their selling gets over. Finally, all these things don't really matter to the market. What matters is the earnings growth. Now, today market is discounted that we will be somewhere around 850 rupees to 875 rupees EPS for Nifty 50 companies in March 2023. Now, if we reach that earning, then my feeling is that markets will continue to rise steadily. God forbid if EPS falls to 800 to 850, markets will correct. And God forbid if my EPS goes to 900 for some magic, then markets will rise. So you will have to constantly figure out what is market discounting today versus what is the likelihood of those things happening. In March 2020, market had discounted that we will never be able to get out of our house and Omicron will take away 5-6 years of our life. Well, that was wrong assumption, and that's why market has recovered.
Thank you, Nilesh bhai. Definitely the market is more advanced than our thinking. And but like now presently the market has corrected nearly 12% from its peak. So what do you say about the valuation? Is it a good valuation for investor to participate more into equity? Or what strategy should one play so that, because now after the fall, the recovery is happening very fast. So client do not want it to miss that short period of corrected times that get missed. So what do you say about that?
So Akhil bhai, we still believe market is around its fair value. It is not a cheap market like it was in March to October 20. It is not expensive market like it was in Jan 2008. Our historical average P is about 18 to 18 and a half. We are currently at 19 times. And we are little premium to historical average, but that can be justified keeping in mind our earnings growth, keeping in mind our current interest rates. Now, if interest rate, instead of being in the range of 6.5 to 7 for 10 years, goes to, let's say, 8.5%, then P ratio will come down, markets will correct. God forbid if interest rate goes to 6 to 6.5%, then P ratio can go up and markets will rise. We believe on today's status quo, today's earning estimate, today's interest rate, we can look to increase equity allocation when Nifty falls below 16,500. Somewhere below 16 to 16,500, you can start marginally increasing your equity allocation as we will be below our historical average P. But at this point of time, let's be neutral weight to equity based on our risk profile, based on our investment objective. What we can keep in equity, we should keep in equity. This is neither time to be overweight nor time to be underweight.
Sure, Nilesh bhai, we'll keep this in mind. I think this is very important because clients keep asking this question that should we increase exposure? What is the valuation? And since you're saying it's neutral, and of course one should be ready that whenever the market falls, one can continue to buy. Now, Nilesh
This
bhai,
is a buy on dip market rather than buy at any price market.
Sure. So one needs to be smart rather than blindly going into it. Sure.
Yes.
Now, Nilesh bhai, we all know, and you also talked about earnings, and market has been discounting good earnings. In fact, fortunately, we had good earnings cycle in the last 2 years, supported by the commodities earnings, which came big time, and because of the pent up demand from the COVID, companies are reporting phenomenal earnings. There's a visibility of earnings coming in 2022 also, which we may see 25-30%. One common question which comes in everyone's mind is that what about after 2022, beyond 2022? From where will the earnings come? Especially because of the commodity earnings don't come in, and if the economy again doesn't grow so much, so from do we expect very good earnings, because eventually earning is what will decide where the market will go. So what's your visibility on earnings?
So Nikesh bhai, in our opinion, this is our golden decade. If you look at 47 till 91, we were on a slow train. For a variety of reasons, our growth could never cross consistently above 3-4%. 91, we did liberalization, we opened up for the world, and our growth rate started moving higher. Then again, there was a period where we took certain decisions, but now we have reversed those decisions. So if you take the journey of 91 to 2021, we have built a foundation for better growth of India. If you remember, earlier inflation was always double digit. Our definition of high inflation was when it was crossing 15%. Today at 6%, we think it is high inflation. This has happened because in 2014, we mandated RBI to control inflation. It's their constitutional obligation. Lower inflation, moderate inflation gives a foundation. So we have transited from high inflation economy to moderate inflation economy. Pre-91 FX reserves, we were on the verge of bankruptcy. Today, we are at $630 billion reserves. आज oil 100 है, we are comfortable because जेब में $630 billion पड़ा है. We have transited from lack of FX to a very, very high FX economy. Earlier, infrastructure was poor. Road, port, railway, highway, electricity. We were one of the infrastructure constrained economy. Today, we are becoming infrastructure available economy. It's not that we are infrastructure surplus. We are infrastructure available. Now, this journey of infrastructure shortage to infrastructure availability is making a difference. If you want to travel now between Mumbai and Ahmedabad, it is 8-hour journey. Earlier, it was 12, 13, 14-hour journey. I recently met someone who traveled from Mumbai to Chennai virtually in 2 days with break. Earlier, that was impossible to imagine. Now, all those things are making better infrastructure for better growth. Third, you see our digital infrastructure. Matlab, today in Western world, vaccine certificate comes on a physical paper. अपने वहां पे तो फोन पे आता है. My secretary does not give me printout of vaccination certificate saying that फोन पे आ जाएगा, आपके फोन में सेव कर लो. अमेरिकन के पास ऐसी चॉइस नहीं है. हम लोग अमेरिका से एडवांस्ड हो चुके हैं डिजिटल इंफ्रास्ट्रक्चर. Then you look at crony capitalism. Pre-90, give and take was the word. Now, thanks to courts, a lot of things have become pretty transparent. It's not that we have reached Nirvana Satyug, but we have improved. Then you look at availability of capital. I couldn't start business because मेरे पिताजी के पास पैसे नहीं थे. He could not give me money कि जा भैया धंधा चालू कर. My daughter, if she wants to start a business, she won't come to me for asking money. She'll go to a private equity fund, venture capital fund, present her idea and raise money. So there is a substantial availability of capital for entrepreneurs. एक जमाने में भारत की क्रिकेट टीम शिवाजी पार्क जिमखाना से आती थी. सब बॉम्बे के प्लेयर थे. Then we saw expansion. रांची से धोनी आ गया, चंडीगढ़ से युवराज सिंह आ गए, and the entire Indian cricket team got lifted up. Same thing is happening in economy as entrepreneurs are no longer from Tatas, Birlas and Ambanis. कोई भी बन सकता है entrepreneur. And finally, government saying that I don't want to be running the business. Air India, when it was with Tatas, it was one of the leading airline. It was not big airline, but it was so famous for its punctuality, service, food, quality, that it became a leading airline. अगर वो टाटा के पास रहती तो आज एटिहाद, एमिरेट्स एंड सिंगापुर एयरलाइन को कंपटीशन देती. गवर्नमेंट के पास आ गई तो obviously it didn't deliver. Now Air India is back with Tatas. It's an Herculean task to turn it around, but Tata है तो turn around हो जाएगा. वही Air India लॉस करती थी 10-10 हजार 5-5 हजार करोड़ का, उसकी जगह पे प्रॉफिट करेगी. It will act as a gateway to bring tourists into India. So this whole transition of high inflation to moderate inflation, low FX reserves to high FX reserves, infrastructure constraints to infrastructure availability, physical to physical and digital infrastructure, lack of capital to availability of capital, government running businesses to government getting out of businesses, put all these things together, we have created a solid foundation for India's growth. Now COVID आ गया, Russia, Ukraine हो गया, break lagegi. But the momentum which we have built is so strong that over next 10 years, we will create far bigger economy than what we have created in last 15 or 20 years in terms of size. In terms of growth rate also, we will be better than what we have done it in the past. So I don't think so earnings growth is a worry. We have today virtually everything in our favor, from global capital availability to infrastructure to sound economic fundamentals for achieving this.
Thank you, Nilesh Bhai. I think this transition will keep happening and we will keep growing. And so that's why the transition from debt to equity also keep happening. But one who is participating into the equity market, and keeping in mind that in the last 2 years, the small cap has rallied so much, what do you think should be the allocation, where the money should go, whether in large cap, mid cap, small cap, but should be that good mix?
So I was just doing analysis on Bloomberg, and this is Bloomberg data, so please take it with a little bit of pinch of salt. The large cap Nifty P is about 22.4 times. And as I mentioned earlier, we calculated it at 18 times, but that's forward, and this is trailing probably. Mid cap is at about 24 times, so it is at a premium to large cap. And small cap is also at 24 times, premium to large cap. This is one of those rare periods where large cap, mid cap, small cap, sab takeshar, baji takeshar khaja ho gaya hai. Our feeling is that at this point of time, you should be marginally overweight large cap and marginally underweight small and mid cap. Normally, when small and mid cap trade at same valuation as large cap, one should be underweight. But we believe earnings growth is pretty strong in small and mid cap. And agar 2018 ke high se dekhe, to Nifty is up about 60%, mid cap is up about 32%, but small cap is just up about 6%. So March 20 se small cap has done very well, but Jan 18 se small cap hasn't done that well. So put all these things together, marginal overweight large cap, marginal underweight small and mid cap. Don't take aggressive call on either side.
Sure, Nilesh Bhai, I think that's very interesting and will be helpful for all the investors. We have a question from Vishal, who wants to know that what is your view on long-term, which means 10-year USD INR trend. Also, he's asking that while Indian growth is in golden period, which you just explained, will this translate to global investors? And lately we have a lot of global funds, US funds, emerging market. What's your view on those as well?
So we believe at least for the medium term, say up to next 3 or 5 years, rupee will depreciate. Our inflation has moderated, but it is still 4 to 6%. Our trade partners' inflation is 2 to 3%. So every year I have to depreciate by 2 to 3%. Now, obviously, currency is currency, so it doesn't depreciate 2 to 3% every year. It moves in a different way. But if you appreciate 5% this year, then next year it is better to assume 7-8% depreciation. If you depreciate 5% this year, then better to assume no depreciation next year. So you will have to do some arithmetic adjustments to arrive at the pace of depreciation. But we think 2 to 3% depreciation a year is necessary, at least in next 3 to 5 years. Now, the second thing is productivity. If my productivity improvement is better than my trade partners, then I can afford my currency. I need not have my currency depreciation. We believe Indian productivity will continue to be at par with global productivity. Infrastructure is improving, digital infrastructure is coming, but our regulatory and compliance burden is still huge. Ease of doing investment is moving in right direction, but it is still cumbersome. And hence, 2 to 3% depreciation over next 3 to 5 years will not be out of sight. Can we look at rupee appreciating over a period of time? For that to happen, we have to bring our inflation down to 2 to 4%, not 4 to 6%. We have to improve our productivity by improving ease of doing business and removing the compliance burden. Now, government is moving in that direction. Earlier, our goods train used to run at 25 kilometers an hour. Now, not all goods train run this fast, but at least on dedicated freight corridor, we are clocking a number of 75 kilometers an hour. Now, if all our goods train go to 75 kilometers an hour, you can imagine what will be productivity growth. Today, the turnaround time in our seaport is about 48 hours. The turnaround time in Bangalore International Airport air cargo is 5 hours. Now, if our seaport can become as efficient as our Bangalore air cargo airport, you can imagine what will be gained in productivity. So if we replicate dedicated freight corridor goods speed train across India, if we replicate efficiency of Bangalore International Airport cargo movement across India, then rupee can appreciate. I don't think so that is possible in next 5 years. Now, one should never say with this kind of confidence because, surprise can always come. But hand on heart, I believe next 3 to 5 years, rupee will depreciate 2 to 3% a year. Not necessarily every year, but in an average basis. And after 5 years, there is a chance for India to have rupee appreciation if we do this ease of doing business and investment.
Thank you, Nilesh Bhai. That was insightful. So we have one question from Mr. Dilip Malpani. And this question is for all the conservative investor also who do not make investment in equity, but towards the debt side. So keeping in mind that in the coming times when the interest rate will rise, what is your view on the debt market?
So Akhil bhai, we believe interest rates are likely to remain elevated and continue to go up. RBI will always intervene at certain level. So when 10-year yield moved from 6.5 to 690, RBI intervened and brought it down to 660. Then again, it started moving up. So we will see a pendulum kind of movement in interest rates, but interest rates going higher. This is all with the current assumptions of oil at 100, US Fed doing 3 to 4 rate hikes, not 5 to 6 rate hikes this year. From an investor point of view, my recommendation is that please consider investing in hybrid funds. You have what was earlier known as monthly income plan. Now they are called debt hybrid scheme. They go between 10 to 25% in equity. Of course, they are more risky than a fixed income fund, but that's why they give better return. You can consider equity savings scheme. These are equity funds from a taxation point of view, and their equity allocation ranges between 10% to 50% or 15% to 50%. I'm not sure about the exact allocation. And then you have balance advantage fund, which goes from 20% to 80% in equity, looking at market valuation. So if you go in a particular hybrid fund, that will give you a better return, albeit with higher risk. Now, Akhil bhai, let's assume, and I'm using this only for example purpose, not that it can be achieved. But in Jan 20, you had invested into hybrid scheme. So let's say you were in expensive market, which was looking to be expensive. You can go into Kotak debt hybrid scheme. Then March 20 happened and all hell broke loose. You lost a lot of money, even though exposure to equity was just 25%, but you could have lost at least 10% of your money in that correction. Now shift that into balanced fund or balance advantage fund, where equity allocation will be 75 or 80%. Markets recovered by 30-40%. All your losses were gone. You were in substantial return. Now move back into Kotak equity savings scheme kind of scheme, or move into MIT kind of scheme. So by doing that allocation, you ensure that even when markets go down like March 20, you actually benefit out of it. You don't lose out of it. It requires active management, which you and Mukesh bhai can provide. It will require some hand-holding with retirees, with senior people. But this is the only way they will be able to outperform inflation. There is no free lunch. If you take little risk, you can generate higher return. And with your advice, with your care, you can ensure that their upside participation is at least 2 times downside participation. ऊपर में 2 टाइम रिटर्न छूटेगा, नीचे में 1 टाइम झटका लेना पड़ेगा. 2:1 is a good ratio and this can be achieved.
Sure, Nilesh bhai, 2:1 is a fantastic thing to achieve, and especially for conservative investors and even moderate investors, we'll definitely look into that. The time is, quickly flying, and there's so many questions, and I think we have not covered a lot of grounds. What I'll do is I'll take up some more questions. We spoke about equity, debt. What about, physical assets? Real estate is again in the news. People are saying, of course, we are seeing a lot of traction. Also, the rentals have gone up, the prices are moving up. There's a view it will go up for maybe 1 or 2 more years. So is it a good time to invest in real estate? What about gold? Of course, gold did not do well for many years, like last 1 year, not many years, and again now it's showing a movement. So what's your view on that? And a lot of people are asking about crypto. Anup, is asking about what about crypto? Hope it's not a rat poison. And then we also had Amit, who asked, what is the view on crypto assets, including timing to buy and percentage allocation? So a lot of questions, and we need a lot of insights from you, Nilesh bhai.
So on the gold, I remain bullish long term. We have seen Russia shifting their FX reserves from US Treasury to gold. At some point of time, China will also do this. आज US is putting sanctions on Russia. One day they'll have to put it on China also. It's not going to be as easy as Russia because, it's a competition between 20 trillion versus $2 trillion economy. China will be 20 versus 20 or 30. So there will be challenges, but will China shift some amount of their money to gold? Answer is quite likely, and that will support the gold prices. Anyway, lower interest rates and high liquidity should be supportive of gold prices. Whenever alternatives like NFTs and cryptos go into downturn, gold prices get supported. Put all these things together, one should be bullish gold. Now, in gold, you have to have a 3 to 5 year horizon or even more. In 2021, gold delivered better return. 2020 delivered better return. 2021 was negative return. 2021 has begun on a good note and should be positive return. We believe, keeping in mind China's potential buying of gold, keeping in mind high liquidity and low interest rates, gold should outperform fixed income over next 3 to 5 years. But you'll have to be ready to bear a year like 2021, where gold will not deliver any return, or it may deliver marginally negative return. In crypto, good that the person who asked the question is saying crypto assets and not cryptocurrencies. Because cryptocurrency is oxymoron. There's no currency in crypto, it's an asset. And the fundamental of that asset is that I believe someone will buy crypto assets at a higher price from me tomorrow. That's why I'm buying today. If I believe that someone will buy at a lower price from me tomorrow, then I will be a seller, not a buyer. There is no fundamental way to value crypto. लोग बहुत ज्ञान देते हैं, ये decentralization है, ये is saving you from the tyranny of central banker and blah blah blah. One can also argue that crypto is nothing but official hawala market. आप पैसा इधर से उधर transfer कर सकते हो. We don't know what crypto is. The best way to treat crypto is like gambling. When many of us don't gamble, fair enough, that's your view. Many of us don't mind going to casino and gamble on a Diwali night or on a Shravan month or whatever it is. Treat crypto as a gambling. In gambling, you don't put entire net worth. You put some portion on which if you lose money, you will enjoy and come back. Treat crypto like that. Put that much money in crypto which you can afford to lose, which if it becomes zero, you won't feel pain. So crypto is like gambling. Take a call, चल गया तो चल गया, नहीं चला तो कोई वांदा नहीं.
Thank you, Nilesh bhai, for that was really insightful. So there's another question from the client. He wanted to understand the strategy of profit booking in wealth generation, and how should we take advantage in this variation of the market? Can there be some robust strategy made in which we do profit booking and wealth generation keep happening? So what is your view on that?
So Akhil bhai, there is one called core portfolio, other called satellite portfolio. Core portfolio, you build of blue chip companies of long-term investments. Satellite portfolio is where you take trading call, and depending upon various factor, you increase or decrease satellite allocation. So first concept is core and satellite. Second concept is underweight, equal weight, or overweight, depending upon valuation of the market. Now, a 20-year guy's equity allocation will be higher than 80-year-old guy's equity allocation. So one is allocation based on your risk profile. And second, in March 20, whether it's a 20-year guy or 80-year-old guy, both of them will be overweight equity compared to their normal allocation. In October 21, both of them will be equal weight to equity. So now put this 3x3 matrix together. Core versus satellite. Core is for investment, satellite is for trading or changes. My own risk profile and my equity allocation. And then I link it with the valuation of the market. That's how my asset allocation happens. That's how profit booking will happen. Let's assume, with the benefit of hindsight, in Jan 20, you would have, okay, in Jan 20, let's say your normal allocation to equity was and 30% was something else. You would have moved maybe 60% of that in core portfolio and 10% in satellite portfolio, because market was looking reasonably priced. There were dark clouds of COVID emerging on horizon. You moved into March 20, that 70% has become 35 or 40%. Now was the time to take rest 30% and put it into equity. You would have gone 90, 95, 100%. And if you were a risk taker, even leveraged yourself to go into equity. Now, you would not have entered right at the bottom. You would have averaged yourself in. But you would have gone with, let's say, 95% equity allocation, despite suffering losses. By November, December 20, that would have delivered you great return. Now you would have taken some profit out and build an equal 70-30 ratio. That would have again delivered great return by October 21. Again, you would have taken profit out. So you will have to map your equity allocation based on your risk profile with market valuation, and also in core and satellite holding, so that you can manage this tax efficiently. That's how you will book profit. That's how you will reduce the volatility.
Sure, Nilesh bhai, thank you so much for explaining this framework and the model of, how can one create a core satellite and take tactical bets in different market conditions. That's definitely very helpful. Nilesh bhai, under you, the Kotak Asset Management Company has done phenomenally well. There was no debt fiasco. The debt schemes have done well. Equity has done phenomenally well. There are some great fund managers, Pankaj and Harsha. The schemes run by Pankaj, like HDFC Small Cap, Emerging Equity, they've done phenomenally well. Now, the other schemes run by Harsha, let's say HDFC Flexi Cap and Kotak Equity Opportunities, they have done very well in the past, but lately they have been struggling. Now, this is a question asked by one of our clients also.
Yes.
Is it because of the size, or is it because of some sector exposure? What is the reason for that? And
sure.
When is it expected to bounce back?
So in Kotak Flexi Cap, we did this analysis of last 3 years' performance as on 31st December. So it is 2020, 21, 20, and 19. So 1st Jan 19 to 31st December 2021. Over there, the fund hasn't done well, especially in 2021. Why did that happen? One, it happened because we avoided stocks like DMart, Titan, and Asian Paints, which were trading at 100, 150, and 200 P. It happened because we invested into stocks like Axis Bank, Petronet LNG, where we thought now the valuations will work in this company's favor and they'll make profit for us. Petronet LNG, when I invested 3 years back, was trading at 18p. Today it is trading at 10p. The stock has given me negative return when their profit is compounded by 25% in last 5 years. Axis Bank, when we invested, it has actually gone down on 31st December. But fortunately, the December quarter results came well and that stock started delivering to us. So there were certain calls which we have taken not to invest in DMart, Asian Paints, Titan, or Adani group of shares because we believe these valuations are expensive. There are certain shares which we have invested and taken the pain because we believe these valuations are cheap. Now, if our call comes right, you will see Flexicap's performance coming back. If this Titans and DMarts and Asian Paints continue to run ahead, then we will definitely underperform the market. You have to take a call based on my portfolio, whether you believe in this philosophy or not. If you believe a stock which is trading at 150 times earning is worth taking, then certainly we are not the right fund manager. We believe growth in reasonable price, not buy at any price. Gar acha hai, baap bekar hai. So this strategy sometimes works, sometimes doesn't work. But over a long period of time, we believe GARP will outperform buy at any price. And you think of this in the context of ARK Capital, Cathy Wood. Their fund went up like this, corrected like this. जब वो ऐसे जा रहा था तो हमारे जैसे फंड मैनेजर सोचते होंगे कि वो क्या कर रहे हैं हम. But today, it's equal. We believe our job is to pick up a process and stay with it because we believe that will work. We will not deviate from this process. We hope that this will work out in future. Ultimately, your entry level valuation determines what happens to your ultimate return. I'll give you an example of Twitter. It has grown from some 500 million to 5 billion in last couple of years, and yet the stockholder return is zero because when you entered at $500 million turnover, you paid some 25 times sales. And today when it is 5 billion turnover, you are paying 5 times sales. So business aise gaya, stock aise hi raha. So you have to pay right price to enter into this stock. Asian Paints, Titan, DMart, Adani, they are all great businesses, no doubt about it. But you have to consider entry level valuation to generate penultimate return, and which is why our funds are today bearing the pain of underperformance because we believe the stocks are expensive.
Thank you, Nilesh bhai. That is really insightful. There's one last question. Time is flying up. And so one last question is about the global exposure, because there are a lot of clients who have global exposure. They have ESOPs abroad. And also our Indian platform is also providing investor to participate into global funds. So, and after this, US market has corrected 20%, 25%. What is your view and what allocation should investor have abroad, especially US? And also touch on China side also, whether this China economy will recover, their government is so rigid, they will provide some catch up or not.
So I'll give you my own experience of global investing. अपना एक friend था, hedge fund manager, very reputed guy, good friend of mine. One day he asked me to invest in Zimbabwe. saying बहुत सस्ता है, ले ले. After buying Zimbabwe at a cheap level, I lost 100% of my money because it went further down. This was when I was very, very young. I'm talking about late 90s. Then in mid 2000s, 2007 to be precise, I saw one global fund house launching in India. Do you know which is the best performing emerging market last year? Iceland, up 108%. That was the poster they plastered on Mumbai, Delhi, Kolkata, Chennai. 2008 में ना ice रहा ना land रहा, सब खत्म हो गया. So when you are investing in offshore market, please remember that there could be very, very high volatility. There was a time when I was working in a multinational fund house, and there was a US war on terror. And if you remember, उन दिनों news आता था कि American bombs are straying and hitting instead of intended places some other places. A colleague of mine from US called me up saying that, I hope you and your family is safe. I believe US bombs are straying in Afghanistan. Now, उसको मालूम ही नहीं था कि अफगानिस्तान और बॉम्बे के बीच में क्या डिस्टेंस है. And even if American bombs strike, they can't come and hit him. This is how people perceive. Now, can you imagine if we were invested in Ukraine, what will be our call? On one side, there is press release from Nestle that Ukraine company is working properly, plants are working properly, there's no worry. On the other side, if we were invested in Ukraine, we would have redeemed hoping or fearing the worst. So one, when you're investing in offshore, please be aware of all these limitations. Second, try to invest on a diversified basis rather than concentrated basis. If you are right on concentrated basis, you will make money like Iceland. But if you are wrong, you will also lose money like Iceland. So it's far better to go into global funds rather than country-specific fund. Obviously, US and China are as good as any continent. So US, China or global fund should be your allocation. Don't try to go towards Iceland or Zimbabwe or those kind of exotic names. Number two, when you're investing, please keep some dry powder for correction. There will be lots of volatility in global funds, and hence dry powder is absolutely necessary to average. Third thing, when you're investing offshore, invest with a view to diversify your asset base out of India. All of us have heavy exposure to India. God forbid if tomorrow Indo-China goes to war, our offshore funds will protect us from a wealth point of view. Second, you try to invest in offshore funds to invest in businesses which are not present in India. There's no point investing in an American cement company because you can always buy an Indian cement company. No point in investing into American car company. Of course, if it is Tesla, then it's a separate game, but otherwise you can buy a car company in India. But there are so many businesses, like there's no company equivalent of Walt Disney. There's no company equivalent of Amazon in India. So try to take diversified exposure away from India into different businesses. That combo will be good guiding point for your offshore investment.
Thank you, Nilesh Bhai, for highlighting the risk, the red flags, and the strategy and the best way to manage the global portfolio. That's very helpful. In fact, it's 6:50. We have taken a lot of your time. Clients have also shown a lot of patience. I see people are there, and I'm sure there are a lot of questions they have in the mind. And we're getting super feedback. On your session. Like Vishal is saying, Nilesh sir has a way of explaining complex things as really easily to be understood by a child. I think with you, it feels like I'm in a college or a university, and a professor is explaining things. We explain so well. And despite, like we had, in the last 2 years, 6-7 sessions, and I can bet you that none of us are bored. We always feel like learning from you. And I really thank you, and I appreciate
so much.
Nilesh Bhai, for taking out time, despite being it's such a hectic schedule for you. So let's close the evening. Thanks to all the clients. Thanks to Nilesh Bhai. Really hope that whatever we have learned from Nilesh Bhai, we use that in our portfolio and investments and make a lot of money. And of course, a lot of thanks to Nilesh Bhai. And on behalf of clients, I want to thank you, Nilesh Bhai. So thank you so much. Enjoy your evening, everyone. Thank you.
Thank you, Nilesh Bhai.
Thank you. Bye, Akhil. Bye.
Bye, Nilesh Bhai. Thank you. Thanks a lot.